Good afternoon. I'm Dryden Pence. Today is Tuesday, October the 27th, around 2 p.m. And this is episode 9 of our videos regarding the markets and the coronavirus. Today, I'm going to talk about the virus, the economy, the election that's about to come up, and the markets. Now, where we are in the coronavirus, which has affected all of us for a very long period of time now, is that we've gone through the initial issue and we've gone through the first wave, and now, as I said last time, summer did not stop the virus. So here we are in the second wave, and it's really beginning to show up, and it's showing up right here in front of the election. The important thing to recognize, though, is that in the United States, what we've seen is a leveling off of the mortality. Fortunately, this tragedy is still claiming the lives of about 800 Americans every day. And while it's a very, very high number, the important thing is it's not rising as much as it used to. So we've been able to have increased therapeutics. We've been able to understand the virus better over the 220 plus days it's been affecting us. And so now we've got better therapeutics, better ways of treating it, better ways of sourcing it, knowing who to protect better. And so the mortality rate is coming down. But as you can see in this chart, the number of cases has now started to resurge again as we move into the fall. This is not a U.S. phenomenon. The virus is the virus is the virus. It affects the entire world. And so that you can see here, this is the situation that they have in Europe, which is actually a little worse than we have it in the United States. So they're seeing a very large peak in the number of cases that they have. However, what's going on is a transition in how we're dealing with this. Now, there's two big debates going on, whether we try to shut things down or whether we keep things open. But in general, what we're seeing is a change in the philosophy of how we deal with the virus. One is step one, in the beginning, before we knew as much about it as we know today and have some of the ways of treating it, the therapeutics, we were in the business of protecting everyone from everyone. Now we're beginning to focus on protecting those who are at most risk from anyone. We know today that the virus affects disproportionately those people over the age of 70. We really have to focus on protecting them. And then younger folks, while they get the virus, it doesn't have near the devastating effects. So as we progress through this, what's happening is the economy and society and the virus are beginning to adapt and overcome. Human beings are the most adaptive species on the planet. And we tend to overcome things and adjust and adapt over time. And indeed, we're seeing that. You see, and I've said this before, because we have this combination of the emotions of fear and aspiration. If you look at human history, aspiration always defeats fear in the long range. And if it didn't, we would still be living in caves and be part of the food chain. So the important thing is human behavior is beginning to adapt. And that's beginning to allow us to move forward with an economic recovery. At the same time, we're trying to work through the recovery from what is quite explainably a biological event. So we're beginning to get the economy to recover versus the virus as people still are dealing with this health challenge. Now let's move on. The important thing is as we begin to adapt to the coronavirus, as we begin to think about how we open our economy, still not having a vaccine, still not having a cure, right? But how do we adapt to it? A couple of things have emerged as very interesting points. The first one is that, by the time we got into July, total retail sales were back above pre-pandemic levels. Now, in March, if you would have told somebody that by July, everything on the retail side, the retail sales would have recovered, I think they would have probably said that you were crazy. But what's happened is two things have happened. One, some parts of the country are able to open up better than others. And two, people have adapted how they handle retail transactions. Everybody's doing it online. Not everybody, but most people are doing something online now. Probably about 62% of the people are now online and doing things like that. And we begin to see an increase in retail sales in the online marketplace. So that's one reason why retail sales are back above pre-pandemic levels. And a couple of other reasons is some of the effects of the virus have been far worse than we expected. Some of them have not been quite as bad. Indeed, on the pure economic side, if you look at real wages and salaries, okay, how is this affecting the economy? How is it going to affect the election coming up? If you look at total real wages and salaries, you can see on this chart, obviously we've had a massive decline. In reaction to the coronavirus. It is creating a recession. However, interestingly enough, total real wages and salaries are still higher today than they were at the end of the Obama presidency. Now that's a kind of a surprising number for some people, but in spite of the coronavirus and things like that, total real wages and total real wages and salaries are higher today than they were 4 years ago. Now, the thing that's different, though, is if you look at all employees and non-farms, that while has recovered dramatically, is not back to where it needs to be. We still have a lot of people that are unemployed due to the economic shutdown as a response to the coronavirus. And until we move beyond this, until we get to a place where we can open the economies up more, coronavirus or not, we're still going to have this problem of total non-farm unemployment. We have to pay very close attention to this. We also have to pay attention to what's really going on out there in society and what are people doing as we've been in this tug of war, as I've said many times, between stimulus and the virus. You see, one of the things that we learned is when we began to get the total unemployment benefits and the unemployment benefits that came in April with the enhanced unemployment benefits that came in at that time, quite frankly, people spent more money on unemployment than they did when they were working. Many people spent more money on unemployment than they did when they were working. And so that was actually a big issue. They had liquidity because of the extra $600 a month. They had liquidity because of all the stimulus. And what they did is they spent the money. They spent the money. And that's what's happened. And indeed, you can see this is when that $600 a month, kind of ran out. Now you can see the fall that we see in things in the spending, right? So it's very, very clear that people react to the stimulus that has been provided by the government. And now we're moving into this huge tug of war, right? This tug of war in the economy, stimulus versus virus. We kind of know from economic terms how we combat the virus. We're still working with how we can combat the virus in medical terms, but in economic terms, we've kind of figured that one out. It's stimulus versus virus. And indeed, initially, we had more stimulus than virus. This is a slide I've used in the past, where we really kind of shut the economy down in those very, very dark days right at first for about 48 days. We put in about 80 days worth of stimulus. So initially, we've had more stimulus than virus. But now that's kind of drug on a little bit, and now it's gotten politicized, and now we've had this period of time where the two sides can't quite come together, because remember, the whole stimulus, this initial stimulus package was based on the assumption that, summer was going to kill the virus, and we know that that didn't happen. So now we need another round of stimulus, and this is showing up, right? When you're seeing, people began to save more because they were locked in, but they were getting stimulus, and now we're beginning to see that money being spent down. And all this goes to say is that it's probably time we're going to need another stimulus package, a far more targeted one for the people that need the help the most, that are getting it the least. And that's one of the things that's going to help continue to bridge our economy to a moment where we can medically begin to overcome the virus as well. Now, when you think about how all this looks, and now we're in political season, right? Some people call it silly season, but it is political season. So it's very important as we go through this. And you have to recognize how people are viewing current economic conditions. And this chart takes how do the Republicans view it, how do independents view it, and how do Democrats view it. And so while we've seen this recovery on the far end of the chart there, you can see this recovery after, as we bounced off the bottom in March, but it's beginning to sort out along political lines here and how people are. And that's going to affect the election. Now, the election's important for a couple of reasons. In pure economic terms, it has to do with stimulus. It has to do with taxation. It has to do with spending. And those are key things that are important. And this is why I'm spending a little time on the election. It also affects volatility of the markets. So it doesn't matter whether you're Republican or Democrat or independent. All of these things are this volatility around the election and then some of this uncertainty around the election can affect your portfolios. And that's going to be why I address it today. There was a period of time a few weeks ago where everybody thought it was going to be a blue wave. And there was like that Biden was going to win and the Democrats were going to win everything. And because of that, the market began to drift up, not because one side or the other was looking at the difference in policy, but that markets don't like uncertainty. So the biggest issue about this election is that it will be over. Now, having said that, we need to move forward. How do we get to over? Right? Well, this is the current map. And it shows there's ways for Joe Biden to end up at the magic 270. There's also a way for Donald Trump to end up at 270. We actually think as you look through the states that are leaning one way or the other, the map changes. Certainly it changed in 2016 right up at the last minute. We really think as we're trying to handicap this stuff, Pennsylvania becomes exceedingly important if Donald Trump is going to win. And if Donald Trump loses Pennsylvania, then it's probably likely that it's a Biden win. But this is kind of how you go through the map. And so the important thing for us to pay attention to is, so what? What difference does that make? Now, also, what's important to people? You see, what's funny is it's really come down where, remember we were talking about stimulus versus virus? Well, now the election is coming down to, well, is the coronavirus the most important issue or is the economy the most important issue? If people think the economy is the most important issue, well, then they tend to be supporters of Donald Trump. If people tend to think the coronavirus is the most important issue, well, then they tend to support Joe Biden. And so as we get into these last minutes, it gets kind of very interesting about where we are in the coronavirus. If you move forward, we have to look at it. There are battleground states. Some states are more important than others in this election. You can probably, it's a foregone conclusion who's going to win certain states, but then there's those ones in the middle that make the difference here. And so this is the issues around coronavirus, the new daily cases, infections per 100,000 in a variety of key swing states. So you can see that some states are doing better than others. Some states, like Wisconsin, are having a much tougher time with a pickup right prior to the election. It makes a difference. It makes a difference. Now, when we look at it here, this is an interesting fact, right? Is that today, Donald Trump is in a better position today than he was against Hillary Clinton at the same time. So this whole idea that it could be a blue wave or that Joe Biden was automatically going to win, it may be a little bit of a misnomer. We actually think that this election, I can't tell you who's going to win, I don't know. But we do believe it's going to be close. And that's an important issue. And that's one of the things that may be triggering some of the volatility we've seen in the last couple of days. Because right now, if you look at the math, right, Donald Trump is actually in a better position against Joe Biden than he was against Hillary Clinton. And then when you think about enthusiasm around it, and again, these are just the numbers that are out there, among Biden supporters, the most important thing for them is that Joe Biden is not Donald Trump. So the most important thing, the biggest thing that Joe Biden has going for them is that he's not Donald Trump. And the people that are enthusiastic about that, they're enthusiastic about that. And then the people that are for Trump are for Trump. So this is an interesting dynamic that we have to deal with. And there's some interesting things about the polls here. There was an interesting poll done back around the 8th or 9th. And this is one reason when you think about all of these issues, pollsters ask very interesting questions. And they're trying to think, what is someone really saying? And is there any truth around this thing that people are shy Trump supporters? Well, when you ask the question, if the presidential election was today, right, who would you vote for? Well, 53% of the people said Joe Biden, 43% of the people said Donald Trump. However, if you ask the same person, who do they think their neighbors were supporting? Who do they think their neighbors were supporting? Then it became 48 Trump, 39 Biden. A very interesting result. And so this is one of the things that you hear, this idea about the shy Trump voter or the people that aren't telling the pollsters the right thing. All of this goes to say is that over the next several days, you're going to see all sorts of different polls. And the polls are going to be all over the place. And the key thing that we're looking at as from an economic standpoint is that it's probably going to be pretty darn close. And that pretty darn close is what makes a difference in how we look at markets and things like that. So it's interesting to see how this election is narrowing up in the final days. So if you go ahead and look at, are you better off? The question was, are you better off than you were 4 years ago? It was very clear. 56% of the people thought they were. 56% of the people thought they were better off. But the question is, are people going to vote on the coronavirus issue, or are they going to vote on their economics issue? That's really going to be what this whole thing comes down to. Now, having said all of that, and the fact that we believe that the presidential election is going to be closer than people think, the key issue is really what happens in the Senate. Now, let me tell you why I say that. The big thing that's going to affect corporate earnings and thus the price of the stock market over the next several years is tax policy, right? And the Biden proposal is that we're going to raise corporate taxes. And if we raise corporate taxes, then the estimations are by Goldman Sachs and several others that could pull 9% earnings off of 9% off corporate earnings. So the point of the matter is, you get a tax increase, earnings go down, that could be negative for the stock of those corporations. So the real issue is, what's the likelihood of that happening? Well, the issue really comes down to the Senate, right? If the Democrats win the Senate, then the likelihood of a rollback of the Trump tax cuts increases. It increases because you'd get a Biden presidency, you'd get a Democratic Senate and a Democratic House. If you get that, chances are you're going to see a corporate tax increase. That could be negative for earnings. And there are really just a few races that are really, really important. McSally, Gardner, and Collins, those get really important. There's a couple of them bouncing around. So the question is, do the Democrats win the Senate or not? If they do, that could be a challenge for the Trump tax bill. That could be a challenge to corporate earnings. So this is why the most important thing we're watching is the Senate. The other issue is that if you ended up with the blue wave and a Democratic sweep, generally the projections are that the budget deficit is going to go up significantly and that's one reason why you see some of this desire around the market, or you see Wall Street talking about the market going up, because there'll be a lot of fiscal stimulus. So the fiscal stimulus package will be greater probably under the Democrats than under the Republicans. And that's why you see, or you saw for a while, some of this rise in the markets in the last week or two. Again, this is going to be a very close election. We can no longer assume one side or the other. We can just kind of sit here and be in a position to know that it's going to be close, and then understand the policy that's going to come out of that whenever one side or the other wins. Now, let's take that through and see what's happening in the markets. First of all, what you've got to recognize is we've had the most rapid market recovery ever. If you take a look, what happened in March, with the market really went down, the rapid recovery has occurred. It's moved forward. You can see we've got one of the best market recoveries ever, because remember, this is a recovery in response to a government shutdown. Not necessarily the virus itself, but the government mandated reaction to the virus. And so as we loosen that up, then economic activity begins to recover. So now the market has recovered back to about where it was. We're beginning to see economic recovery back to where it was, but it has not been uniform across all sectors. And that's very, very important, because what's going to happen in the market over the next year is going to be driven by how quickly do some of those sectors that are still quite depressed based on all of this, how quickly are they going to recover? So this is one thing that we have to watch. You got to be prepared for what's going to happen in a Biden presidency, what's going to happen in a Trump presidency, what's going to happen in the Senate if it's Democrat, what's going to happen in the Senate if it's Republican. Those things are going to affect these sectors. Now, it's very, very important as you go forward. We really try to recognize that people don't shop from the red aisle or the blue aisle. People shop in the human aisle. So we build portfolios. We look at portfolios from the standpoint, what's going to go on no matter what? We don't have a perfect picture of what's going to happen in a few days. So let's make sure that we understand what goes on no matter what. What are people going to buy regardless of who the president is? That's an important thing, because that's going to drive economic activity. And that's the way we're positioning portfolios for the economy right now. Now let's also take a look at what's going to happen in the market as a whole. So we're focused on the no matter what portfolios, the no matter what people are going to buy regardless of who the president is. Okay, now what can we think about the market in general? Well, the thing is the market, I said this a little earlier, the market does not like uncertainty. And it looks like we could go into a little period of uncertainty here. Right? The market originally, if we can get a very clear victory for Trump, a very clear victory for Biden, then the market has certainty to move through. But what happens if it's close? What happens if we have a contested election? What happens if we don't have a clear answer right away? Well, let's go back to 2000, and you can look at this chart. The market after November 7th kind of began to fall and go through because of the uncertainty between the Bush-Gore election. And it wasn't until mid-December, December 13th, when Al Gore conceded. And then we're trying to kind of figure out all of those various issues. So what you saw was the market got volatile after the election because it was very close, because it was an uncertain result. And then you began to see the market recover as things kind of shook themselves off and moved forward. So we kind of think, since we believe it's probably going to be a very close election, as opposed to a massive win on one side or the other, that we may see a contested election. If we do, we're going to see some volatility around it. And that's why we think it's good to kind of have some dry powder. It's good to be a little careful right now. And then be prepared to take advantage of the volatility rather than be its victim, so that you can kind of pick. Once we get through this, we can say, okay, this is the result of this outcome, this is the result of the other outcome, and be prepared around it. But in general, it's okay to be a little careful right now. Hold a little extra cash, kind of be a little nimble through here. And that's the way that we look at it, because you can see this in a contested election being a little volatile for 30 or 45 days. The most important thing to remember, however, is if you go back over history and you can look at the markets going all the way back to 1949, the average recovery of the market the year after a presidential election, the performance has been on average about 7% up. And indeed, since 1909, it's been positive in the year after a presidential election almost every time. So I think that the thing for us to pay close attention to is that this is not a time to panic or be overly concerned. It's a time to be wary and a time to pay close attention to some potential volatility, and then be ready for whichever result. And that's the kind of the way we've set it up. So I've talked a little bit about the virus. The virus is still with us. It's not going away. We don't yet have a vaccine that's readily available. We don't have herd immunity. We're going to have to learn to coexist with the virus. But we know so much more about it now than we did before, that we can protect those who are most at risk and then allow those who are at less risk continue to get on with their lives and move around. On the economy, it really comes down to how much stimulus is going to go into the economy. We need to have some fiscal stimulus. The Federal Reserve is doing their part, but on the economy, we need to have some fiscal stimulus to help bridge those people that are most affected by the virus, most affected by the shutdown, to help get through. We know the solution set, right? We know the solution set. Stimulus overcomes the economic effect of the virus. Now the question is just how much and how long and when. And while we're doing all of this, our medical professionals are continuing to combat the virus. So the economic governmental professionals can combat the economic results of the virus, while we allow the medical professionals to combat the health effects of the virus. So that moves us into an economy that we kind of know what to do. It's just getting everybody to do it. And the election's going to be over in a few days. And I think after that, that's when we finally get a stimulus bill that will carry people through to the next phase of this. Now let's talk about the election. I've said it a dozen times today. We think it's going to be close, but there will be an outcome. We've successfully transitioned presidents for over 200 years. And we think that we're going to have a successful transition here, regardless of the outcome. And that means that things can be a bumpy here for 15, 20, 30 days. But in the end, we'll be able to clearly understand which policy is going to win, which policy is going to go into effect, and how do we adjust portfolios in accordance to that. And until then, what we do is we focus on the thing we always focus on, is human behavior. We focus on the consumer. We focus on the things that people get up every day and do every day, regardless of politics. And we think that those are the things that are going to be the fundamental economic drivers of investment performance, of economic performance, and our daily lives. So the important thing here is recognize the markets may be volatile. The election can create a lot of noise. But in the end, think about what you do no matter what. And those are the things we look at. We look at human behavior, we pay attention to that, and that's where we focus investments. So thank you very much. I hope this has given you some perspective about all the noise that's going on around you, and you can recognize that we're on top of this, but most importantly, that hopefully it gives you some assurance that we're going to get through this. We're going to get through the election, we're going to get through the virus, we're going to get through whatever comes next. Thank you very much for your time. See you next time soon.